Good morning. Thanks for tuning in. You're watching the F&O Show on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet D'Souza.
Good morning, Navneet. I'm Agam. Let's start by taking a look at the headlines. Indian markets mirror Asian peers start the week with a weak footing. The Nifty trades with a % lower. And Max Financial Services sees the highest open interest in today's day of trade as it explores a long-term partnership with Axis Bank. Aurobindo Pharma is the most active by volumes after US drug regulator revokes the voluntary action initiated status of Aurobindo Pharma plant in Hyderabad days after the letter was issued. And Donald Trump is just hours away from touchdown in Ahmedabad to kick off his two-day visit to India.
Well, that's the biggest event, I guess, lined up for today. We'll see what sort of bilateral conversations take place. But talking about the markets, remember we were shut on Friday, so we are adjusting to that day's trade as well. Since the global equities were down on Friday, we had a gap down opening and we breached psychological level of 12,000 on Nifty. 11,952 is where currently Nifty trades, and it's trading with a discount for last 2 or 3 sessions. So the discount actually has widened from Thursday's closing discount. So right now it's at about 17 points. Also remember, this is the monthly expiry week, so you can expect heightened volatility. And in fact, just on day one of this fresh week, you've seen the India Volatility Index going up by as much as 8 to 9%. And I guess this is the biggest move that we've seen at least post the budget session. India wicks close to levels of 15. Nifty Bank is also down in trade. We've seen cuts of about nearly 1% coming about, and the futures there too trading at a discount. Remember, barring breaching psychological levels in terms of daily moving averages, if you look at the 100 DMA, we breached 100 DMA for both Nifty and Bank Nifty, and of course for Nifty now the next level to be watched out will be 11,900, and on Nifty Bank we'll be closely watching out for that mark of 30,000 on the downside. All your sectoral indices are in the red, and broader markets are also not spared today. So you've seen losses coming across the board. Mid cap, small cap index also registering losses. The market breadth is of course weakish. You are seeing that in favor of the declines. The ratio is almost 1:2. I just want to pull up the Nifty Metals Index. It's fallen by as much as 3.5% as we speak. And remember, and that's solely going to do with what's happening with China, which is the biggest consumer and producer of metals. And due to coronavirus fears now escalating to other countries as well, you are seeing such a sharp fall of 3.5%. I think just Nifty IT is holding up in green, and that's precisely got to do with your heavyweights there, TCS and Infosys, which is trading in the positive territory. Very quickly then on the option side, what can you expect for this weekly expiry? Maximum open interest on the put side is at the 12,000, but we've already, by the way, breached that mark. You are seeing fresh riding, in fact, coming in at the 11,900 put, which is so far added about 6 lakh shares. But 12,000 put, surprisingly, has not seen any unwinding. I think that's a positive takeaway so far, but remains to be seen what happens in the second half of the session. But aggressive call riding has come in around the 11,950 call, which has added about 10 lakh shares, and even the 12,000 call strike has added about 21 lakh shares. So far, I think we'll be watching out for 11,900 on the downside for Nifty, and for Nifty Bank, of course, 30,000 remains a psychological mark to be monitored, Agam.
All right. Well, there you have it. That's the view. Well, and that's the way markets are panning out right now. But let's talk about a handful of stocks which are also buzzing in trade today, and see where we're seeing an increase in open interest in Torrent Pharma and Max Financial are right at the top of the list. Torrent Pharma is under a tad bit of pressure right now. There is a selling coming through. Max Financial, on the other hand, looking at longs, which is also advancing, of course, on account of the news with respect to a possible partnership with Axis Bank. We have Tata Steel, which is in focus, which is looking at severe shorts too. It's down 4% nearly. Biocon, on the other hand, well, it's not really reacting to the US FDA observations, and Muthoot Finance, of course, is advancing by as much as 2.3%. But what about stocks which are seeing unwinding? And this is around the time when we start seeing these numbers go higher as we move into expiry. Of course, SRF is, however, is the only one which is looking at a 1.5% decline in OI. Not too much to speak for otherwise. I reckon it will still be with the news-based stocks this morning, Navneet, specifically Max Financial Services.
Yep, in fact, a lot of news-based reactions coming by, and Max Financial does feature in our list as well. So on the show today, we will be discussing few stocks with our experts, Aurobindo Pharma being one of them, which has slipped below the 200-day moving average. Remember, just last week on Wednesday, it had surged about 20% in trade, and in an unprecedented move, USFD has cancelled the VAI status that it had given to Unit 4, which essentially means the inspection which took place in November 2019 is still open. We are seeing fresh short positions here. Max Financial is the other one, which is up for the 5th straight session, and it's been trading above all its key moving averages. And the reason for that is Axis Bank and the company are considering to enter into a long-term partnership. And lastly, GMR, which is at fresh 52-week high. For the year, it surged about 17%, and they are looking to sell 49% stake in the airport business for nearly 10,780 crore.
Very interesting move coming in on GMR Infra, but well, we'll talk about these, but let's get in our experts for today. But before that, here's a reminder. If you have any queries regarding futures and options markets, you can call us on 022-454-04141, and of course, write to us on Twitter, Facebook, and YouTube. Don't forget to add the AskBQ hashtag. Today, we have with us Amar Singh of Angel Broking and Navneet Daga of Yes Securities joining us on the show. Good morning to both of you. Thanks for taking the time out. Navneet, I start with you. Where do we go from here when it comes to the benchmarks?
Well, good morning, Agam. Well, if you look out, we are stuck in the typical kind of a band whereby we have found a lot of support in the range of 11,900 range on the Nifty, and similarly on the upside, we have not been able to take out about the levels of 12,150 odd. So that 250 band, kind of a band that we have been trading and been very volatile within that band. Every day we have seen a big gap up or gap down happening according to the global markets. But to my understanding, there is no major conclusive trade or evidence which is showing me that we are breaking below that 11,900 that immediately. However, even in the down market, we are not seeing the major put unwinding as well as not major kind of a big spike in the walls. To me, understanding it's looking like this trend will continue. We were expiring near that 12,000 mark is quite a higher possibility to my understanding, and having a sideways view is what it's looking likely to me. But overall trend on the bank Nifty, to my understanding, is getting a weaker. We have seen the heavyweight private sector banks, they are being under pressure and continues to be on the downward trajectory. The likes of HDFC Bank, likes of Axis and ICICI Bank, they have been contributing on a downward move. So to my understanding, that's where one should concentrate, being on the short side. And having a similar view, one can initiate kind of a bear put spreads on the bank Nifty monthly options, which is buying in 30,500 puts at the money and selling in OTM puts twice the quantity, that is ratio spreads. And 30,000 puts, we're getting an outflow of almost 75 to 80 points. And I believe that we move towards that 30,000 odd levels on the expiry, this trade can be profitable.
Okay, so Navneet's advising a bear put ratio spread on a Nifty Bank right now. Let's go across to Amar as well and take his views on indices. Hi Amar, good morning. Do you use these dips to create long positions, or do you expect further downside?
Looking technically on the charts, what we are seeing is for the major indices, be it Nifty or Bank Nifty, that the weekly charts are clearly indicating that there is more of consolidation in the offing. And as far as the levels are concerned, I would say somewhere around 11,850, 870 is a very crucial zone of support for Nifty. So we've seen a retest of the earlier low which Nifty had made on 18 February of 11,923. So that has been taken out today and it's trading slightly above that level. So we'll have to watch out for, but I would say on the downside, 11,850, 870 is a very crucial zone of support. Higher levels definitely around 12,050, 12,100. Now that should act as a level of resistance where could we witness selling pressure also, and some fresh short positions also being built ahead of the monthly expiry. As far as Bank Nifty is concerned, again, Bank Nifty, if you look at, again, displaying similar trading pattern as far as Nifty is concerned, it has got strong support for Bank Nifty coming around 30,200, 30,300 odd levels, whereas the resistance now would be seen around 30,850, 900 levels. So higher levels will be sold into, and those who are going long, they would like to book profits. So I would say it's more of a range play with slight negative bias. As long as the support holds, then we could witness some bounce back.
Okay, well, from there on, let's talk about stocks since we have spoken about indices. Navneet, coming back to you on stocks that are looking interesting to you today, what's on your radar?
Look, there are two stocks. One is on the from the financial services basket. If you look at MFSL, has been in the news flow, with the thick of news flow action. And if you look out on the charts individually, you look outside that there has been a very aggressive long build-up which has been seen in the last couple of days. And secondly, we've seen a kind of a break, kind of a thick of resistance at somewhere near to 550 to 560 odd range, and it has taken a lot number of time now supports near to that range. So to my understanding, the charts have improved, and it's looking likely that somebody has got a positional point of view. This stock is looking likely that it has seen a big breakout and might see towards a level of 620 to 650 odd. So I'm recommending a kind of a covered call strategy when the March futures, by buying and at the money, buying at the futures in the range of 580 odd range and selling an OTM call of 600 for the March series. We're getting an inflow of around 32 to 35 points depending on the entry range. I'm expecting the stock to move towards the 620 to 650 mark in the coming series, and keeping a downside stop loss on the level of somewhere near to 550 below can be a good strategy going forward for this stock. The second stock on my radar would be on the sell side. Basically, metals has seen a big breakdown after the big correction in the global markets, and the weakest stock among the metals looks to be Vedanta, whereby it's not hardly been able to hold on to the support level of 140 odd, and to my understanding, it has started to see a break below that 140 odd mark. The stock can move towards that 52-week low somewhere in the below 130 odd mark as well. So one can still mark futures in the range of 139 to 140, but the stop loss of 146 on the upside. I'm looking for a target on the downside of 129 for the March futures.
Yes, so those are two stock-specific calls coming in from Navneet. Remember, we also wanted to discuss Max Financial on the show, which has been doing well. It's up for the 5th straight session. In fact, you've got a couple of brokerages like UBS and Nomura, which have increased the target price. The stock's up and about. It's up about 4%. And the reason for the same is the development where Axis Bank and Max are considering to enter into a long-term partnership. And that's precisely the reason the street was expecting some bit of deal to come by. But as of now, there's a possibility of entering into a long-term partnership, which Street has taken in stride, and in fact brokerages too increasing target price. So it's a covered call where Navneet's advising to long March futures at 580 and simultaneously sell 600 March call strike at 32 with the target price of 620 or 650, and he's placing a stop loss of about 540. All right, let's move on and take Amar's stock specific recommendations for the day as well. Amar, in terms of individual stock futures or stock option, what are you recommending?
Yeah, I would say the first stock to look at is Voltas. What we are seeing here is that Voltas technically continues to be stronger on the charts, and if you look at the long-term charts or the intermediate-term trend, even the short-term trend, that continues to be extremely strong and positive. And in spite of the index witnessing the sell-off today, Voltas, if you look at it, that's marginally up. So I would say this is one stock one can definitely look at. So around 720, 725 at the current levels, one can look at initiating long position with a stop loss of 707 and a target of 755 on the upside. And the second stock to look at is from the IT space, and that is Infosys. What we are seeing in Infosys is that Infosys has moved out of a consolidation. Earlier 800 was acting as a crucial zone of resistance, so that has been taken out. And also the stock is displaying some sort of bullish momentum on the daily charts, as well as the long-term charts remain positive, and also the way the rupee has depreciated, that also is definitely helping the IT stocks. So this is one stock one can definitely look at, Infosys. So Infosys buying around 800, 805 odd levels with a stop loss of 789 and a target of 836 on the upside.
Okay, well, there you have it. Those are some of those stock calls which are coming in from our experts. And since we have spoken about Max Financial Services, we'll go on and address a handful of the other ones. And, well, I actually want to talk about something like a GMR, because GMR is another one of those stocks which has always been tough to, well, trade, I reckon, considering the kind of volatility that stock has seen. Today, it's up as much as, well, nearly 10%. It's seeing an increase in open interest of around 4.5%. This is, of course, after we understand that, well, the airports of Paris, of course, is looking to pick up about 49% stake in, well, one of those GMR Infra divisions. And, well, we'll be watching out for how things pan out eventually. And, of course, the news was out over the weekend. But how are things shaping up when it comes to, well, technically, and what are the futures and options space telling you about GMR Infra? Well, Navneet, let me come to you on this one. How are you reading into these variables?
Look, GMR Infra, if you look out, not a small time frame chart, but if you look out on the weekly and the monthly chart, it's giving you the signs that this has been a long years of consolidation. It started to break out about that range of 24 to 25 mark. And to my understanding, the moment it starts to sustain about that, and currently it's sustaining about 26 odd levels, with the chances that we might see continue the trends getting the momentum getting added up, and we have seen some kind of a call unwinding also happening at 25 odd level. That's where the largest the build-up is there. So overall, technically it's looking likely that it is going into a different trading orbit altogether. And on a positional side, if someone can maintain some of the levels of 24 as a stop loss, one can still look to enter into and looking likely that it can move towards the 32 odd mark as a trajectory. And the kind of an improvement that I have seen in the charts is looking likely the one can hold a period of time between 2 months or 3 months horizon. One can still get the decent exit point in the stock.
All right, remember this is a new specific move that you're seeing on GMR Infra. Usually it is considered to be a high beta counter, which is still there in the futures and options market, and all-time high levels that we've seen on the stock are somewhere about 130, which was seen back in 2007. That's GMR Infra for you, but Aurobindo Pharma, in a very surprising move, US FDA has cancelled the voluntary action initiated status that they had classified last week, and owing to that, remember, the stock had moved 20%, but it's given up gains because they've cancelled that status, which essentially means the inspection of November 29 and still open, and we yet have to see now how they classify this particular unit for going ahead for Aurobindo Pharma. Remember, it's the cheapest pharma company, which is trading at 10 times. It's been a laggard at a time when we are seeing other pharma companies doing well, from the likes of Dr. Reddy's. You've seen good move there. You've seen good move for Divi's Laboratories as well. The stock's down about nearly 15 to 16% in trade. Amar Singh, what do you do? Of course, once again, this is a new specific move, and with today's move, I believe it's fallen below its simple 200-day moving average. Does it warrant to take any fresh shots at current levels?
I would say if you look at the charts technically of Aurobindo Pharma, clearly shows that on the daily and the weekly, the stock is positive, but the long-term trend still remains negative for the stock. And what you rightly said was that based on the news that had come, the stock witnessed some volatile trading session. Now, technically, if you look at the levels, somewhere on around 18th of February, it had made a low of 480, 482. Now, that should act as a short-term bottom for the stock. So, I believe the stock should hold that level, and if it consistently trades above 510, 520, then the stock has a potential to rally towards 535, 540 zone. So I would suggest that yes, on the long side, one can definitely be on the long side with a stop loss below 480 levels. But on the upside also, the stock seems to be capped somewhere around 535, 545 zone.
Okay, well, from there on, let's talk about a handful of stocks coming in from our viewers. And we actually have two viewers who are interested in knowing what to do with State Bank of India. We have Jawahar, who needs a 1 week view on State Bank of India. He is holding it at around 325. And well, I believe we also have okay, yeah, we have one more viewer. That's the same one actually, who wants a view on SBI. So let's pull that up. Okay, so we can pull up a 1 month chart or a 3 month chart and take a look at how the State Bank of India has been moving off late. Okay, so it's at around 325. It has seen some gains off late in the past couple of days, but not too much to speak for otherwise. Amar, I come back to you on this one. How would you address State Bank of India? The viewer is long at 325. The horizon's 1 week.
Yeah, I would say that he should definitely hold on to his position. What he should watch out for on the cash side is that SBI needs to sustain above 330, 332 levels, because that's a crucial zone of resistance. If that resistance zone is taken out, then the stock has a potential to rally towards 336, 337 levels, where he could look at booking profits, because that again is going to be a key resistance zone. Technically, I would say it's positive on the charts.
Okay, so SPI looking positive on charts, and it's also trading with some bit of gains. Remember, but PSU pack as a whole is not doing well. The Nifty PSU banking index is down in trade. Let's take a query on the other banking counter, but that's a private bank. Sarang Patel writes to us. He shorted Kotak Mahindra Bank March futures at levels of 1720. He's very much in the money. He wants to know if he should hold on to this short position as he is making money. Can he expect lower levels from here? 1670 is where 1672 to be precise is where the March futures are trading. Navneet, what would you recommend? Book profits or stay put and place a stop loss?
Well, to my understanding, stay put, trail your stop loss higher to 1695 should be your not trailing stop loss on the March futures, and it's looking likely that the kind of a downward trajectory that private banks are setting in. Kotak Bank again can be a kind of a mild underperformer within the set, and to my understanding, I'm expecting back again somewhere near to 1640 odd levels to be retested on that stock. So just keep trailing your stop loss until the trend is in your favor, and stop loss should be placed at 1695 and move towards 1640. You should look to book profit in that case.
Okay. We have a query from Vishal Shah, and well, he wants to know how can one hedge or rather play a hedge trade for the Nifty for this particular expiry, which happens to be this coming Thursday. Well, Vishal has not mentioned whether or not he's long or short on the Nifty right now, which is why I'm going to assume that he is long on the Nifty and he's looking to hedge this position. Amar, how would you help Vishal out with the assumption that he's long on the Nifty? Would you recommend selling calls or buying puts?
Yeah, I would say looking at the way the Nifty has been trading for the last few days, he can look at the 11,900 put option, so which is currently trading around 59 odd levels. So any pullback in that towards 50, 52, he can look at buying, because if Nifty breaches the 11,850, 870 zone, then we could witness a very sharp correction in Nifty. So to play on the safe side, he can look at buying this strike.
Okay, that's call on Nifty. Let's take a query on Bajaj Finserv. One of our viewers with the handle named on YouTube called F&O Student wants to know any levels, any view on Bajaj Finserv basically to take any trade. The stock's down about 1.5% and just moved into premium, the futures, after trading into a discount. Amar, I come back to you. Would you recommend taking any position on Bajaj Finserv or any key levels to monitor here on the charts?
Yeah, I would say that technically it's, if you look at the weekly charts or the daily charts, Bajaj Finserv clearly shows that it is in a trendless zone. So there's not clear trend. And if you look at it again on 18th of February, it had made a low of 9,400 or so. So that should act as a crucial zone of support, whereas on the upside resistance is around 9,800. So this 400 point range is where Bajaj Finserv is likely to trade. So ideally, he can look at a trade around those levels. Higher levels can be sold into with a stop loss above 9,830. Whereas on the downside, one can look at booking profits somewhere around 9,400, 450 zone.
Okay, and another stock which has been gradually rising upwards is Biocon. We have a question from Sneh on YouTube, and Sneh is looking to buy Biocon March futures at current levels. What is the way forward for this one? And as I have been suggesting, at least as the last couple of months are concerned, well, it's gradually moving higher. Navneet, your view on Biocon March futures, what would your advice be to Sneh?
Well, apart from the news flow, it's on the charts. If I stand alone, if I look at the stock is showing a lot of gravity on the upside, and it's been within the pharma space, is within the rank outperformer, and it's looking likely that the momentum it's continuing on the upside. To my understanding, if somebody is looking to still initiating a long position, the stop loss now it's quite deep, and I'll wait patiently towards the level of 310 to 312 for an entry point, because my stop loss levels come somewhere in the range of 302 odd levels for the March futures. So if any declines are there towards that level, one should look to enter into it, and positionally it's looking like that it heads towards the 335 to 340 odd mark in the next coming series. So overall trajectory is looking likely up, and mild dips should be used to bought into with a stop loss of 302.
Right, the stock's in positive despite of getting 3 observation for its Malaysian unit in the form 483, and a lot of pharma companies are in focus today. In fact, Sun Pharma is up and about. You are seeing gains coming by, and that's basically on back of Business Standard reports indicating that the promoters have not misappropriated any sort of funds to the tune of nearly $6 billion. 2% higher for Sun Pharma actually right now, 413. Amar, do you take a trade here?
No, I wouldn't, because somewhere around 415, 416 is a crucial zone of resistance for Sun Pharma, so I wouldn't recommend buying around the current levels.
Also want to pull up Tata LC because this one is looking at an interesting move. After, well, seeing some weakness earlier on in the session, it has recovered and is currently trending up by around 1%. It has, of course, corrected from the mark of around 1100, well, about 7 odd sessions ago. But how would you address this one? Navneet, your opinion on Tata LC, how do you expect this to move and levels to watch?
Well, look, the entire mid-cap IT space is it's been in a continuous on an uptrend. Mild pullback is there from the upside, and it's looking likely that mild pullback should be used to be in the being on the buy side. The overall medium to long-term charts has not been disturbed, and it's looking likely that the stock will gradually keep on inching higher, and towards the levels of somewhere near to 940 to 950 has got a lot of support zone now developed into the kind of pullback that we have seen from that level. So to my understanding, if somebody has got a 5 to 6% kind of a downside kind of risk appetite, one can still look into be on the long side on this stock, and overall trajectory suggests to me that 1080, 1100 is again possible on that stock on the uptrend. So to my understanding, any weakness should be bought into, or either one can can place a deep stop loss level or somewhere in 940, or one can still be on the long side.
Okay, that's Tata LXC for you, which has gained a lot in the last 6 months, giving you good returns. It's become a 4-digit stock. Pull up Ambuja Cements, and that one's reacting to good set of numbers. Operating performance was good this time around owing to lower cost as well as higher volume growth that we've seen. But remember, the realizations on sequential basis were on the lower side. Amar Singh, basically ACC Ambuja have not done too well, but in the recent past we are seeing some bit of momentum. In fact, last week itself the stock moved above its simple 200-day moving average with 3% move seen post the numbers today. Would you bet on the long side?
Yeah, I would say technically if you look at the charts, be the short-term, intermediate or long-term, clearly shows that the stock definitely seems to have been forming a bottom. And the stock has a potential to rally towards 218, 220 levels, because earlier that was a top that the stock had made in January, towards the end of January. So clearly reflecting that that's going to act as a resistance zone. But yes, one can look at buying on dips. Now the stock has got good support coming around 200 odd zone.
Okay, guys, we have reached the end of the show, so I am going to take a moment to thank both our experts, Amar and Navneet, for joining us and taking us through their views on the markets. Don't forget to log on to our futures and options pages on BloombergQuint.com.
Well, with that, it's a wrap on this edition of the F&O Show. Thanks a lot for watching. Stay tuned to BloombergQuint for more news and updates.